Hello everyone, can we all hear me? I think that's a glitch. That was a glitch. Okay, can we hear me? Okay, good evening everyone. If you can hear me, please do well to let me know. It's good to have you all on board. Time the time with Tutor Ayo, and in today's tutorial, it's going to be a continuation of the course BUS205, and hopefully tonight we are going to conclude everything we have to conclude on the course, and we can start with Eco 1 to 2 economics in our next class. With this being said, let's straight into it. Please, you know how we do things. As you join the class, do want to say hello, good evening, smash like button, and after the class, you know what you're supposed to do. Send a picture of your notes to the respective group. With this being said, let's straight into it. Okay. BUS205. Good evening, Mr. Joseph. Is this the same Joseph I know, or is another Joseph? This is Jacob Joseph. Oh, okay, it's the same Jacob Joseph I know. Good evening, Mr. Joseph. I think I'm seeing you very well. I think I'm getting to hear from you for the very first time in the year. I said I'm still the one. Okay, so today we are bearing, all right, from contracts. All right, please permit me. There's this noise in the background. It's the noise of the generator sets. Throughout today, there has not been power supply from ADC, so we're going to have our class like this tonight. So just ignore the noise in the background. It's been crazy today with electricity, but we just have to make do of what we have. So now we are going to take our bearing from contracts. All right, today we're going to take our bearing from contracts. So when we say contract, what do we mean by contract? All right, don't forget the thumbnail for tonight's class says legal issues in business. All right, we've been talking about business, we talked about the internal, we're talking about the external environment. All right, now we want to talk about the legal issues. All right, the legal parts to business. Okay, we are about 7 of us, and I'm seeing just one like. Please, you know how we do it. Let's smash the like button as we join the class. Now, according to Coffee, that's Coffee in 2005. According to Coffee says contract, all right, is a situation whereby the seller transfers or agree to transfer the property to the buyer for money consideration called price. All right, that's according to Coffee. All right, now he said the seller, all right, agrees. All right, the seller agrees to transfer. All right, the seller transfer or agrees, all right, or in the case whereby he agreed to transfer. All right, Miss Blessing, it's great to have you on board. Mr. Edward, you all are welcome. All right, so when we say contract now, according to Coffee 2005, it says it's a situation whereby the seller transfer or agreed to transfer the property to the buyer. all right, to the buyer, all right, for money consideration. All right, called, that money consideration is called price. Now, like I usually say, understand the concepts. Let's point out the key points. Okay, now in this definition, you must have noticed that contracts cannot happen with just one person. At least you need a minimum of 2 persons, and these 2 persons, all right, there must be somebody like what we treated yesterday. I think the course is a little bit more of the infusion of ENT 101 and 102 and BUS205, because yesterday, all right, with ENT 102 we treated something like this, and we even talked about offer, whereby we have the offeror and the offeree. All right, so in contract now we also have the buyer and the seller. All right, there must be somebody who is offering something. All right, both parties are actually offering something, both the buyer or the seller, you are offering something. So it now depends on what you are offering. All right, in case of the seller, he is the one that offers the property or the product or whatever it is he's offering, and in case of the buyer, he also has to offer something to get what is coming from the seller, and that which he has to offer is called consideration, all right, which is price. So both ends benefits from contract. Contract is not one-way thing. It's a win-win agreement whereby both involved end will benefit. All right. So we have the seller, we have the buyer, all right, we have the transfer. There's always an exchange, transfer of something. Power must change hand. Something must go and something must come. All right. And there also has to be compensation. There has to be a reward. All right. As you can see, property. So the seller offers property, and in return the buyer offers consideration, which is called price. Now if you are into a business, all right, if you are into a business and you have an item to sell, or you are willing to sell it, now when you transfer the title of goods to a buyer, this contract is called sales. Now let's take this for example. Transfer of title of goods to a buyer is called sales. All right, the transfer of title of goods, all right, to a buyer is called sales. All right, and we also have, take note of this, in a situation whereby, an agreement is to pass on, all right, an agreement is to pass on the possession of an item in a future date. All right, the passing on of an item in a future date, all right, with some condition attached, is called agreement of sales. All right, agreement of sales. So we have that as that. So please note that. Now there's something called bailment. Bailment is an agreement between two parties that goods should be delivered to another party or that goods should be transferred from the second party to the third party based on instruction given by the first party. Bailment. Alright? Bailment is said to be the agreement between two parties. Alright? Agreement between two parties, not one. Alright? That goods should be delivered to another party. Alright? Goods should be delivered, alright, to another party. Alright? Goods should be delivered to another party, alright, or to a third party from the second party based on the instruction given based on the instruction, alright, of the first party. And we have that as bailment. Okay, now let's continue. There's something also called hire purchase. Hire purchase is an agreement. You keep hearing agreement. All right, no, all these things are contracts. All right, and in a contract, the foundation is that anybody involved, you don't force anybody into any contract. All right, it's not, if you force anybody into a contract, to an agreement, it's not a contract. All right, it should be, I agree, I am in total agreement, all right, and let's do this. Then as a contract. So now let's continue. We have hire purchase. Speaking of which, it is an arrangement between parties, all right, for the second party to have an item under some condition. Until such conditions are fulfilled, the item still, all right, that of the first party. I love this definition. Now, pay attention to this. All right. Now, it is an agreement. All right, agreement between, let me use parties. All right, agreement between parties. All right, okay, let's just say two parties. Between two parties, let's be precise now. I wish, this course is actually a pen and paper course. It would have been wonderful. You get to express yourself. I mean, it would have been easy. Now it's computer based, so it's kind of limited. All right, so we are about 10 of us, and I've seen just 4 likes. What is on everyone? Please, you have to subscribe to the channel, hit the subscribe button, hit the like button. All right, it's one of the requirements of being joining the stream. Now, agreement between two parties, whereby, all right, the second party, all right, is permitted to have an item the second party is granted, all right, an item, all right, under some condition, all right, under some condition, and at which the condition is just fulfilled, the item still belongs to the first party. All right, belongs to the first party. So basically we have that as that. So without further ado, permit me to raise the board so we can, because we still have some things to take, some things to handle. Now, let's talk about the classification of contracts. Hope we are together, hope we are following. For as many of us who are yet to submit our notes, please let's go to submit our notes. Highly essential. That's one way to monitor our progress. Highly essential. Now let's talk about the classification. All right. All right. Contracts. So we have contract under seal, all right, and simple contracts. Contract under seal and simple contract. CUS, contract under seal. SC, simple contracts. Contract under seal is a written form of contracts, all right, and is signed by both parties, and there is a seal on it. Written, all right, signed by both parties, all right, seal on it, all right. A simple contract, on the other hand, is an informal kind of contract. Miss Queen came late. It's great to have you on the stream. Okay, simple contract is an informal kind of contract. All right, the contract may be written, may be oral, or mere conduct of the parties. All right, so let me write that with the red marker. Informal. All right, maybe oral, maybe by conduct. All right, it may be written. All right, it may be oral, or it might be by the conduct of the parties. So we have that as that. Also, we have the all right. Basically, contract is classified into two. All right. There are types of contracts. All right. Let's talk about the types of contracts. Although it's a bit dicey in the material, it says they are classified into two, and basically it's still saying some other classifications, right? So, but let's just start this as types of contracts, all right? Where we have the express contract, we have the implied contract, we have the quasi contract, all right? We have the bilateral contract, we have the unilateral contract, all right? Now let's just quickly touch on each of them. Let's just quickly touch on each of them. Expressed contract, right? We have implied. We have quasi. We have bilateral. All right. We have unilateral. Okay. We have joints. Okay, I think we should stop there. Now, when we say expressed contract, what are we talking about? Okay, expressed contract. Express contract is when the parties manifest their agreement by words. Contract that is written, oral or under seal is called expressed. Basically, any contract that, I mean, all contracts definitely, if I'm not mistaken. I mean, if you are going into a contract, it should be stated clearly in black and white. This is what binds us. If you do this, you get persecuted. If you do this, I have to cut you off. If you do this, you get this. If you do that, you get that. All right. So basically, it's more like a general kind of contract whereby each parties express, all right, manifest their agreement. All right, manifest their agreement. It could be written, oral, or oral or sealed. All right, but it is clear that both parties, that's the key point under express. These things are dicey, right? They look very, very, very close to each other. So please take notes. Manifest the agreement. So now, implied by the act of conduct of the parties, and it is sanctioned by the law. All right, this is by the act of conduct. Contract by the act of conduct. So that means this should be types of contract, because this now falls under simple contract. So I think it's the error from the material. The ones listed here should be types of contract, and this should be the classification. Because here this express contract now falls under this CUS. All right, contract under C. Are we together? That's it. So now we have the implied. It is by act or conduct. All right, implied contract is by act or conduct of the party. And is sanctioned by the law. All right, so we have quasi. Something looking or resembling. A contract can best be described by example of doctor who treats an accidental patient through, all right, but brought by passerby. All right, this is not a real contract. It is more of close to being a contract, looking like something or resembling it. That's the meaning of quasi. All right, so close to being a contract. All right, it's like an example of an unfortunate scene of accidents. All right, and passerby assisted people involved in the accident. So bringing them to the hospital, the doctor quickly attend to them, at least to save their life. So this is more like quasi. And when we say quasi, it means something looking like or resembling something. All right, so it's not really a contract. All right, so we have bilateral contract. All right, this has to do with mutual promises. Making mutual promises. When two parties are making mutual promises, here we mean mutual. I want to ask us, please, bilateral contract, we say mutual promises. Does it mean that an example of this contract is relationship? Can we say that relationship between two adults? All right, don't get me wrong. Relationship between two adults, can we refer to this as a kind of bilateral contract? Class, what's our suggestion? All right, can we refer to bilateral contract, all right, as the relationship between, okay, Mr. Joseph said it's not, sir. Mr. Joe said it is. Mr. Joseph, can you just drop a sentence on why you disagree? All right, because the key word here is mutual. All right, so can you just drop a line while we continue the class, please? All right, it says parties making mutual promises. All right, so now let's continue. Okay. So now we have the next one as unilateral. Please, I will give this let me even do it as assignments. No need, don't let me distract the class. So this is an assignment. I will repeat it, I'll write it out properly. Assignment. Is bilateral contract an example of relationship between two adults? Explain. I'll write it out properly, but let me just note it now. Now, unilateral contract, it is a situation where an offer is made and accepted. All right? Here, there's an offer. Offer is made and accepted. Okay. So we have joint contracts, and here it says here two or more people. This is a contract that involves two or more people. Joint, all right, contract. Two or more people are involved and are jointly bound. All right, jointly bound to what? To do what? To fulfill an obligation. So now let's continue. Now, what is an offer? When we say offer, all right, what is an offer? It can also mean a what? Offer can also mean a proposition. Okay, and it's between two persons. The offerer, person making the offer, all right, and the offeree. All right, that's the person the offer is being proposed to. All right, offeree. So we have that as that. Also, we have acceptance. Acceptance. All right, if an offer is made, a reply to it, all right, is referred to an acceptance. A reply to an offer. So there is no acceptance if there are no offers. So that's how it works. There are no acceptance, or you can't talk with acceptance. Miss Happy, they are just coming. We came late. So permit me to raise the board and let me write out the assignments out before we continue. Hey, I've cleaned it though, my goodness. Okay, bilateral. All right. Now, by, all right, lateral contracts, all right, an example of a relationship between, all right, a male, let me spit it out clearly, and female adults. Explain. All right. So please let's note that. So while we take that down, online it like this. So while we take that down, there's something called consideration. All right, consideration. Consideration, all right, all right, the price. Consideration is said to be the price which a promise is bought. Consideration, the price which a promise is bought. All contracts must be supported by consideration. All right, a bare promise is not legally binding. A bare promise is not legally binding. Okay, so we have that as that. Now let's continue. Now let's take note of this, please. We have capitals plus liabilities equals assets. Now note that accounting is generally accounting is generally regarded as a language or the language of business used in describing transaction entered into by businesses. All right, that's what accounting does. So we have capital, all right, the total amount supplied by owner of its business. All right, total equity or net worth. Okay. All right, so we talk about assets as resources, all right, owned by the firm. All right, something that generates more money. So we have certain books of accounting. All right, books of accounting. We have the likes of the ledger, the journal, the cash book. I believe we have written this. I want to erase this. Please submit your assignment this night or submit it tomorrow before our next class. Okay, so we have books of accounting. So let's talk about ledger. Ledger is a principal book of accounting. All right, contains a permanent record of all the transaction of the trader of a company. Yeah, all transaction. So we have the journal, there's a U there, sorry. Journal. A journal is a subsidiary book. A sub is not a principal book, it's a subsidiary. All right, it's a subsidiary book. This is not where the final or the permanent record are. All right, so that's why it's not one of the principal book. It's a subsidiary book. All right, a book of prime entry. All right, when we say prime entry, like as you are making sales, you are putting in one of the books of prime entry, which is journal. Journal is one of them. All right, let me say original prime entry. Basically, journal is very useful because it is from journal that you can form your ledger. All right, because journal is a frontline officer. All right, as you are making the transaction, as you are making the sales, it goes into one of the subsidiary book. All right, and journal is one of the subsidiary book. All right, and it's also a book of prime entry. All right, so journal is also very important, where you record financial transaction in chronologically order. All right, the day-to-day record of business is in journal. All right, you can correct error, you can open entry in the journal. You can correct error, open entry, where you put your sales. All right, your purchase sales, goods you bought on credits. All right, And basically there are types of journals. So for the types of journals, we have sales purchase, we have sales, we have purchase, we have return inward, alright, return outward. Return inward now are goods that you sold to a customer, but the customer returned it because of damage, or maybe that's not the specification they requested for. But return outward now are goods you bought, you spend the money has left your account, but realize the goods are not good, so you have to return them. There are ways we treat all this in book of accounting. Alright, so all these things goes into the journal. So we have balance sheets. Alright, balance sheet is where you balance your ledger. Alright, basically is where you balance your ledger. Okay, so we have, alright, balance sheet helps you to determine your financial position. Okay, so we have that as that. Now let's quickly talk of marketing mix. Alright, and when we say marketing mix, we are talking about combination of marketing decisions that are used to market specific products. Marketing mix, combination of marketing decisions used to market a particular product for a particular time. So we have one, there has to be a product. Alright, you have to have a targeted audience. Alright, what we call promotion. Product, anything tangible or intangible you intend to get value in return for. Alright, price is what we call the consideration. Alright, anything you have to give up to acquire a service or goods. Place is that position or that environment you wish to sell. Alright, where you feel your targeted audience, who that need your products are. And promotion is anything, whether paid or unpaid, that you do, physical or unphysical, that you do to get your product known. Alright, so these are the things, we have that as that. And let's talk about product life cycle. Alright, okay, now product life cycle have 5 distinctive stages. Alright, 5 stages. 1, 2, 3, 4, 5. Alright, 5. Let me even write this with some other marker. Now it's product life cycle. 1, 2, 3, 4, and 5. Now the first stage is the development stage. Right, that's where you get the idea. Right, that's where you first conceive the idea. That's development stage, and at this stage, 0 profit, 0 sales. All right, second stage, where you introduce. All right, that's introduction. You introduce your products, all right, to the market. Yeah, low sales, slow sales, and in some case no sales. All right, then we have growth. All right, now you make sales. Your targeted audience recognizes the presence of your product, know what the usefulness and why they should go for it. So you are making sales here. That's growth. And after growth, we have maturity. All right, and sales here will drop because they're already getting to know. There are any new things coming out. All right, so maturity all right, the sales is slow down because your product has achieved acceptance. All right, maturity, your product has achieved what? Acceptance. All right, and we have decline as the last stage. Here, sales falls off and profit. Basically, not all products actually follow this process, but this is just what it looks like. So let's quickly talk about there really not much to say about communication process. All right, basically communication. All right, there has to be an encoder, a decoder. All right, the encoder is the person that sends the message, that has the idea. The decoder is someone that receives the message. All right, and there has to be a channel, all right, through which you have chosen to pass the message. All right, and there also has to be feedback. All right, so that's all on communication. And basically we have something called interpersonal, intrapersonal, external. Communication. Now when we say intra, we are talking about within, all right, talking about without. Okay, here information transfer, info transfer, all right, intra, all right, inter, like inter, more face to face. So we have that as that. Now there's something called, all right, insurance operates the principle, all right, that a small payment, all right, a small payment of premium or premium by a large number of people will occur, all right, to cover even a unsustainable loss. All right. Now, the concept behind insurance is that pay, whether in small bits, right, or in large quantity amount, all right, over time, for days whereby no one ever prays for any bad thing, but for days whereby one experience unrecoverable loss, all right, insurance will cover it. And you keep hearing the word insurance. And we have types of insurance. We have the life insurance, all right. We have general insurance, all right, and the life insurance has to do with individual or group life, all right. General insurance, we have the likes of fire insurance, accident insurance, motor vehicle insurance. Those ones are general insurance. So and we have certain types of risk, all right. We have risk averse. When we say risk averse, what are we talking about? Risk averse, all right, is someone, all right, someone that has a strong dislike for anything that has, all right, for risk. So basically, we can't teach all of the keynotes in the class. All right, some are still has to be kept for people in the private class. Eventually, they are going to get the notes. So if you're not yet a member of the private class, all right, do well to join today. So I think on this note, we'll call it a wrap for today. So I want to say a big thank you to each and every one of us that attended to this class. Please, let's do well to submit our notes after the class. It's very important. And so thank you very much, Miss Happy, Mr. Edward, Miss Blessing, Mr. Jacob, Mr. Jonas, Mr. Green. It's great to have you all on board, and I look forward to seeing you all in subsequent tutorials. Have a wonderful night rest. Bye bye.